So what's the underlying picture in Malaysia? I'm joined by Teng, who's Managing Director of Capital Dynamics, and he's with me in the studio. Thanks for being with us.
Thank you.
Last time you came into the programme, just after the election, you were fairly negative on Malaysia's economy. Things don't look to have picked up greatly, but then we're in an overall fairly slow environment. So tell me how you think of Malaysia right now after the election and Mr. Najib's first few months back in power.
Nothing much has changed. The worrying signs remain. The declining trend continues. So I guess for the next 6 to 12 months, those are pretty critical months. You have the up north elections coming up soon. I think in the case of Malaysia, if you were to ponder on its economic future, you inevitably has to layer it with the political conditions. And once you combine the political vacuum that we have together with the economic challenges that Malaysia is facing, then I think there are good reasons for me to have a lot more grey hair.
Let's talk about the political situation in just a second. Firstly, though, the economics that are perhaps not quite so manageable, and that is the situation in China. I mean, there's not really anything Malaysia or anyone can do about that.
Yep.
How much of a problem is that going to be for Malaysia's economy?
To an extent, you're right, that there's nothing much that whether Singapore, Hong Kong, Malaysia can do what is happening in China. But I think if you look at, say, in comparison, the other economies, the economic policies could have been a lot better many years ago, in the sense that I think we are in a situation now, Malaysia is in a situation where she has no choice but to rely on a very narrow base to drive her economic growth. And these are primarily property sales and car sales. And because of these two sectors, and because interest rates have been low, credit access has been easily available, household debt in Malaysia is, I think, the highest in Asia. So what that has come about is because of our economic policies that did not result in an economy that's a lot more agile, that's a lot more flexible, that's a lot more competitive.
And part of your argument is that the current the current political situation, particularly after the last election, doesn't allow for any real substantive change to occur.
You can't reform. I mean, any form of reform is always painful, at least in the short term. And if you're going to go to your voters and asking them to vote you, and you're going to introduce painful reforms, you'll be out of office very fast.
So what happens next?
I think we are in a very critical, Malaysia is in a very critical position. You have trade surpluses that have been declining at a very fast pace. Typically, Malaysia's capital accounts in deficit. So the balance of payment and so on is in surplus, mainly because of the trade balance. So if the trade balance, as you can see in June's figures, exports hugely negative, continues in this negative trend, then the foreign funds, the foreign investors are going to be worried about Malaysia's external position. And the ringgit is really weakening.
But you say a critical position. What do you mean by that? What's the potential worst that can happen?
Household debt at very high level. That means that you have to control your domestic demand. But if you control your domestic demand, you curb it, your GDP growth is going to slow down. And external demand is weak. So you can't really slow down your domestic demand.
But what about in terms of stock markets, interest rates, the currency? Are you seeing major crises in those areas?
I hope not really. But if the next 2 to 6 months are not managed well, or if we are unfortunate in the sense that the US dollar were to strengthen a lot more and America really exit from its quantitative easing, then I think the ringgit will move a lot weaker. And in that case, the interest rate differential between Malaysia and, say, US would narrow substantially. At that point in time, then what? Are you going to increase your interest rates in Malaysia to attract funds? You can't, because your growth is domestic based, and a lot of it are interest rate sensitive. Car sales, housing sales.
Is there something that you think needs to be done immediately that would help this situation, and is it looking likely that it might be done?
The monetary tightening has to come in. The terms for house purchases, for car purchases have to be a lot tightened. I think
But wouldn't that just exacerbate the slowdown that you're already complaining about?
Najib is in, the choice that Najib has is, as we know, is a Hobson choice. There's only one way to go, and that is to make sure that your domestic demand doesn't get out of hand, so that your external concerns do not get out of hand. Because if those external concerns, and if we are unlucky enough that the US exit a lot earlier than what is expected, the US dollar strengthened more than what is expected, then you have a potential mini crisis in the making.
So do you have advice for people who are already invested in Malaysia or are considering it?
The Malaysian stock market on the whole is not cheap. It's trading at a trailing PE of about 17 times, depending on what index you're looking at. At 17 times for Malaysia, it's very hard to find bargains. And given the fact that the currency outlook is on the negative side, I think if I'm a foreign investor, I would tend to be a lot more cautious than, say, 2-3 years ago.
All right, so not a good time to get in, but time to get out?
Yes, yeah. I think in our case, because we are value investors, we have been raising our cash level over the last 18 months, and we can't find good bargains there, so we are still maintaining a pretty high cash level.
All right, thanks very much indeed for talking to us. Teng from Capital Dynamics joining us here in the studio.